Hey, everybody. Welcome to the weekly wrap up here at verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist. So it is a quiet day today on this Friday, July 4th, but there is action to talk about. So first off, the S&P futures are open or were open today. And even though the stock market was closed, there was some market moving activity. What we heard was late on Thursday, Trump said that letters were going out to various countries with their stated tariff levels. All right, the futures overnight sold off. We continue to see selling into today. The futures closed at 1 p.m. Eastern time. So right off the bat, S&P futures are down about 43 points, even though the stock market is closed. Now, this was very, very much contrived, meaning that Trump did this exactly on purpose to have minimal impact on the stock market. He released it after the markets closed on Thursday, going into a holiday weekend, so the least amount of people would be paying attention. He slipped that news out, and the idea is he knew the futures would probably be down on Friday, but the idea is that by Sunday night into Monday, it would be old news and the markets would come back. And honestly, that's what we've seen lately, right? We've seen the markets doing that type of thing where they kind of shrug off the news after a couple days when the markets are closed on a weekend. So let's jump into the charts and take a look here, guys. We can see that this is the S&P futures, right? So this was where the stock market closed yesterday right here, okay? And you could see that in the after hours, the futures were open and they started to trail off. And then right here really is right where that news starts to hit. And you see the futures take another leg down. And now you can see the futures were already selling off a little bit, right? They were trading down. That means that there were insiders that knew this news was coming and they were unloading in the after hours, while you and me, retail investors, were none the wiser. Now, over that period of the overnight, the futures kind of bottomed out into today, and we closed today right here at 1 o'clock p.m. Eastern time at around, looks like around 62.83 on the S&P futures. Now, I told you guys, or I've been mentioning, that we are approaching the scene of the crime on the S&P. That has now been tagged, and I found multiple other levels that all coincide here. So what's so fascinating about this, and I went over this with members in their daily analysis video yesterday for Thursday, but we're now at a key point on the S&P, right? We talked about the break of the trend line. In fact, let's jump over to that daily chart and take a look. Here is your daily chart of the S&P 500. And just be clear, the futures do not reflect on this because the S&P futures are different than the S&P. The S&P futures lead the S&P in the overnight, and then the S&P opens at 9:30 the next trading day. Now, in terms of this won't be until Monday at 9:30 a.m. Eastern time, but we can still analyze the chart. Take a look at this. This was your scene of the crime retrace trend line right here. And what we could see is that, look, as of Friday's close, we tagged that level at around 62.80. So that has now been tagged. Now, in addition, I found this level, which is fascinating. Look at this, guys. Look at this. Pivot low right here to pivot high, and it coexists right at the same level there. So that is unbelievably interesting as well. In addition, there's another level, I want you guys paying attention to. This one right here, which is right into that same level. Now, notice this. This is from your low in 2023, basically your bear market low, or close to it. I guess we were a little bit lower, but this was the last big pullback in the S&P before this bull run here, and it goes right to this low here in August and right up here, and it coexists right in that same vicinity. Now, you might say, okay, well, you have three trend lines all in this range. That should mean significant resistance. You would be right? So ultimately, we know that when we have one trend line, 60% resistance, meaning it can cause a pullback with probabilities favoring 60%. You get 2, 70. You get 3, probably 75 to 80% chance. Now, the last thing I got to show you guys, and I've gone over this before, but we have now gone into it. Let's go back to that chart here. And what we're going to do is we're going to erase all these lines. We're going to go down here. We're going to switch over to the logarithmic view of the markets, right? All right, now why logarithmic? So when you look at a long time ago, price obviously goes up exponentially, right? But with logarithmic, it's more based on percentages. And therefore, you get a clearer picture when you're going back 10, 20, 30, 50, 75 years in the market structure or the market chart. And that's what I'm doing here. I want to go back to 1929. We're going to go to our monthly chart. We're going to go back to 1929 right here. Here's your high before the Great Depression. You can see the stock market crash was right here in 1929, followed by a big bounce, and then the continuation into the Great Depression. Take that high, drag it out to this high, which is the .com high, drag it out, and what do we have here? And this is always hard to do as precise as I want, but let's do it right there, right? So exactly. So what I like to do is I want to go to the exact high. See how the highest point on the .com bubble right to that line. Then what we do is we say, okay, well, now look, this line extends out. And just to show you guys again, high pivot to exact high pivot, we extend it. We almost got there in 2021's bull market. We did not. Now we've pushed up in 2024. We hit it. That caused that 20% approximate correction in the S&P. Lo and behold, where are we? We're right back to that line. So what I'm pointing out to you guys is I just showed you 3 trend lines on the daily S&P that were more short-term, that were all in this zone. And now we're on the logarithmic chart. And now we also see this trend line is we have now retraced back into this trend line. And so listen, how do we take this, right? I mean, that's the big question. What do we do with it? Well, we can say that now we have multiple factors that are pointing to that this is a very pivotal area or zone on the S&P 500. Now, it doesn't guarantee a pullback. There's no such thing as pullbacks that are guaranteed or pops that are guaranteed in anything when it comes to investing. But are the probabilities substantially high right now that we see some sort of pullback? And the answer is yes. All right. So again, interesting that these lines were all tagged on Thursday on the last trading day of just before July 4th holiday. And then lo and behold, the futures dropped 43 points on the back of these letters going out to various countries. Now, again, we'll see by Sunday night into Monday when the futures open back up. Does this have teeth, or does the investing public shake it off and we see the futures are basically back to the flat line into that evening? All right, let's go into some other charts real quick here. Quickly, let's go into the U.S. dollar chart here, and the U.S. dollar continues to be on the weaker side. So you can see the U.S. dollar did trade today as well, down just slightly. Notice again, we had a key support level here. All right, if we zoom out, high pivot to low pivot to low pivot to low pivot. Look, 1, 2, 3, 4, and you broke on the 5th hit. Now, the structure, or what I teach in the Winning Trader series, is that essentially 4 hits. Once you do 3 hits are almost like high probability bounce for 3 times. Once you get to that 4th hit, that's where you start to say, okay, at this hit, there was about a 50-50 chance of a break. On the 5th hit, 60-40. If it bounced again, 70-30. 80-20. The point is, the more you hit once you get past 3 hits of the line, which again is 1 here. Well, this was technically a high pivot, but 1, in fact, this is 4, right? 2, 3, and here was 4, and you broke on 4. So just interesting to note that. Speaking of another great trend line, take a look at this chart here, guys. This is Alcoa, and I'm jumping ahead a little bit, but I wanted to show you guys this. It's a great, great trend line here. You can see that if you go back to this zone right in here, there's a key trend line, right, connecting these lows. And what we can do is we can essentially connect these low pivots right through here. Look at this. So this one was interesting because it's 1, 2, 3, 4, 5, and 6. It actually held up for a longer period of time, but on the time count, which is 7, it then broke to the downside. And then look how it rallies back. What's this called? Retrace to the scene of the crime. In theory, what should happen here? This should be rejected. Probability-wise, this strongly favors a rejection, as again, the support line held 6 times before it broke, and then on the 7th, or on the next time it comes back and retraces, that's now 1 from the opposite direction. And by the way, I teach this all in depth in the Winning Trader series. And again, guys, remember, just through the next couple days, the courses on verified investing are all 50% or greater off. Once that passes, they won't be on sale again. Maybe I'd think about a Christmas sale, maybe. But again, it might only be 25% off or something at that point. So grab it while it's hot, guys. Again, Winning Trader series, I think, is 55% off. All the other courses are 50% off. All right. Again, through July 4th, but we'll probably have it go through the weekend. The idea is the July 4th weekend. All right, back to the charts we go. Let's take a look here. The 10-year yield, this was a beautiful thing. So same thing. Look at this. 1, 2, 3. On 4, it breaks. And then what happens here? It retraces. What should happen here, guys? Again, just asking as a basic quiz. You guys know the answer. It should get rejected. Now, listen, does it always get rejected? Well, no, right? Because it's probability based. So the probability of it getting rejected is about 70%. 7 out of every 10 times it gets rejected. There are 3 times out of every 10 it might break through. But when you're talking about investing probabilities or gambling probabilities, right? If you go to a casino, you're never going to quite get 50-50 odds. Close in some games, close, but not quite. In investing, my kind of goalpost is 70% or greater before I make an investment, right? Before I say, okay, let me give it a shot, 70% or greater. And the idea being is if you can win 7 out of 10 times, even if you lose 3 times, you're still coming out very nicely ahead. All right, back to the charts we go here. Let's flip over. The SMH has rallied incredibly higher. It is into some key levels, upsloping trend line and double top it pierced. Now, again, very interesting. We did see a pullback on Thursday on the half day right there, although it did not form a topping tail, but very extended chart, guys. Again, I'm looking for some sort of retrace here. Now, again, listen, do I know if we're going back down here? No, we don't know. What we do know is there's a high probability of rejection here for at least a pullback to the first support level. First major support would be kind of right in here. Gap fill, high pivot. There's also a pivot right in here. So that would be kind of your base case for a pullback, which again, on a percentage terms, what would that get us from the current closing levels? Let's say down here, that'll be about a 6.5% pullback. And that's kind of the minimum. Gap fill would be about 7.6%, maybe down into this level here. That would be about 8.75%. But the idea is about 6% and change would be kind of the base case pullback, and then you would look to see if there are more. Microsoft continues to stay strong, but again, it's approaching this longer term trend line here, guys, and it's still in this upward sloping parallel, very, very tight parallel. Wouldn't it be interesting if we chop around and go up and down inside of this? So up, down, up, and then let's say right up here, this line merges, right, to right there. And that would be the golden nugget right there. That would be where this channel resistance line, so this resistance line that we can clearly see rejects price every time it hits, it crosses right there. That would be a 2-factor sell short. At that point, you would assume it would not only pull back to here, but have a much bigger pullback on Microsoft. Bitcoin, of course, is open 24/7, 365. Notice as the S&P falls, or the futures fall, I should say, Bitcoin is pulling back. It did recapture this line, but never confirmed. So again, it was a weak breakout. That's what we call potentially a fake out. And we are seeing it pull back here. So again, no close above, closed above, no confirmation. And now it's back below, as obviously the risk asset is behaving like a risk asset, at least in the short term. Okay, next up, let's take a look at gold. Again, not much to go over here because gold really not doing a whole lot here. You can see again, we'll keep an eye on this. But right now, folks, in any case, we're really just keeping our eyes on what's going on here with the precious metal, which is basically just pausing. Had a pullback yesterday as the stock market went up on the jobs report. And then it was open today, in all fairness. But nonetheless, didn't really do much. Is still holding technical support. If we go to silver again, you can see it did close above that consolidation bull flag. That is the beginnings of a potential breakout. But remember, it has to confirm. Today, again, traded a little bit, but it did not confirm. We'll watch on Monday. If it can confirm the breakout, then, again, I've talked about this before. Here's your next target, your upsloping trend line, around $39 per ounce. Okay, oil, let's take a look at U.S. oil. Again, I am no longer in my short. So far, that was a good exit. I didn't get too greedy on this. I got out right up here, and it's pulled back. Now, it could go higher after that. But again, I was just looking for that quick snapback after being short all the way down, and we got that. So we got the short and the long trade. Now it's pulled back and is just consolidating. I'm looking at this and saying to myself, what is this starting to look like? Looks to me like maybe a bear flag starting to form, which eventually leads to that next leg down. And then lastly, natural gas, folks. We'll take a look at nat gas, hovering right on technical support. Again, no trade here for me off technical support because it's already hammered on it too many times. Instead, I'm looking at this level down here around 309. If that gets tagged, that would be a potential long level. So listen, when all is said and done, folks, as we get into next week, I'm looking at markets that are into major resistance. Okay, the S&P, I showed it to you when we started. All right, the three trend lines that were shorter term, meaning going back a few months to 6 months or so, those trend lines all merging, retraced to the scene of the crime, has now completed. And then we looked at the logarithmic chart on the S&P, and that again is now being tagged going back to 1929 through the dot-com bubble high, through the 2024 high. And again, we're right there at that level. Now, again, like I said, what should this do for you as an investor? Really, it should make you just more aware. It doesn't mean you got to be all out of all your positions, but I would say like at least have trailing stops that if we start to really collapse, you have an exit strategy. The other side of the coin is what I do, which is I short the market into these levels. So I start to short, doesn't mean I'm going to be right, but again, it's all about probability. So if I play 70 or 80% win rate plays every time, I should win 7 to 8 times out of every 10. Of course, I'm going to lose sometimes. That's the nature of investing. But again, it's a numbers game. You do 1,000 trades, win 700 to 800 times, you're making millions. And that's what we do. So listen, no hype here at Verified Investing. No narratives, no BS. It's charts, charts, charts. All right. Let the media, social media spin the hype and pump you up. Hopefully you don't get kind of screwed and chased because of the hype. Let the mainstream media spin the narratives. Here at Verified Investing, it's all about the charts. What are the charts saying? None of my personal opinions. Doesn't matter. The charts are the truth. That's the only truth in this world of investing, what the charts are saying. You guys have a wonderful one. As always, guys, I really do appreciate you guys, each and every one of you. Thank you so much, as always, for joining. Have a great one, and I'll talk to you on Monday. Take care.